So as you can see, this is the current condition. Uh, we have entered the trade again, and I'll explain why. But before that, we need to go back. Let's remove this. And yeah, let's go back. Let's go back here. So at this point, when we are deciding, this is where I gave the trade here, uh, gave the entry and all. So what was the thinking behind the trade? For that, we have to go back to the longer time frame first. What was going on in the market, and this is possibly on the peak, the highest peak of the downside. This is because the first one came. This is the just minor correction, normal price action correction to the liquidity pool, and the price could have gone back, and it would be still in the bullish trend. This price finding this sell side liquidity here, and then finding its way upside, it will still be kind of bullish because it's mostly, if we look at it, holding to that pattern. So it will be still kind of holding to that pattern of upside, uh, correction upside, correction upside, correction upside. So it will be simply continuing that traction, but it was not to be. The price broke down. This is Monday. This is the last week's Monday, and the price broke down. And this is where things become interesting. If you go back to the 4 hour, you see that the liquidity pool has been broken down. But what I saw there was this was kind of a major flush, and the price like failing and failing to break the FVG, but pushing higher each time. So if you look at this 16 hour, this is one challenge, two challenge, three challenge, four challenge. So in this 16 hours, every time there is a new high being created. The following challenge on the FVG, another new high is being created, and it almost broke out. It almost did that. And what we are looking at, what I was also looking at, is this level. If we look at this, this is the level. The price did that breakout in June. This is the level price found resistance and fell down in August. It has provided support and resistance on both sides. As we can see, has broken out. And this was a price I think I was looking at. The 19,100 area is a potential area of reversal. But that was not offered. What we needed was a double bottom. And that's exactly what we got. If we turn that on and resume the price action in the next candle, that's what we got. The double bottom was formed. And that's why we entered our trade. So if we look at it uh, from an objective point of view, the bottom was created. And that's why we entered. I will explain how we entered the trade, and why didn't we stay longer in the trade uh, in a bit. We are just letting the price action continue. Um, this is where this before this point we exited the trade, and around here we entered the trade. So let's remove it. We know where the double bottom is, and the triangle is currently going on. So we are removing the chart patterns for now. And we're also removing the liquidity pools because yeah, that's no use. We don't have much liquidity pool here. Now, if we go lower time frame, and we know we want to enter around this area, where do we enter? So to get the entry, I went to 15 minute and 30 minute. I actually, on that case, I got 30 minutes. And I put one entry in each area. Uh, so one of my entries was here, and this 19,350 area, which got filled in this candle, and the other entry point I had was a bit below, I think around this area, which is so what is exactly. So 19,336 and 19,236 around that area. So in the middle, around the middle point, I got the average entry, which we can see here was uh, sorry, uh, at 19,265. So calculating both entries, we got the average entry of I got one entry at 19,383 and this one at 19,260. Sorry, so 260. Yeah, that's the entry. So that's the entry we got. My SL at that point was set at 19,050. I wanted this was the low, so the low was at 19,100. So I wanted a 50 point margin in between that point, so that I would not get shaken out, while also keeping the stop loss to a limit. So at that point, my stop loss would be on the 21 lots. Uh, Average entry of 260, around 200, so around $4,000. So around $4,000 would be my stop loss, and my target was initially. So initially, what my target was, let me remove these drawings. Initially, my target was not based on the 15-minute, of course. It was based on the 4 hour. So this was the point, or this was the point that was my initial target. So around these lows and these highs. So that was the point of my target. Almost 20,000, 19,992. So that was my target area. And I let the price continue. So the price action continue. I didn't even look at it internally, what was happening. The volatility that NASDAQ goes through, if we look at the lower time frame, we would not be able to keep any trade, because this is a candle that has a movement of $250. So it's impossible for us to, this is even more. I think this is moving almost $300. So that kind of internal movements, we really cannot manage. We have to trust our levels and keep up. Now, what was happening interestingly here is the price challenging that same level, same internal level that was there on the FPG here. So this FPG was being challenged again, and the price actually broke above and closed. So in this case, this was the Monday this week. This Monday afternoon, I was looking at it, and the market structure broke, and this was US opening, a lot of volatility there. Uh, but yeah, it didn't concern me because we were secure. My stop loss was already pulled up to this point, so my stop loss was pulled up to this point, which would have made this a risk-free trade. I was really certain of it, and at that point, uh, yeah, I just left it. And when I came back on Tuesday morning, that was quite interesting. When Tuesday morning I came back, I saw that there had been bearish engulfing here. So in the morning of Tuesday, Asian session, there has been a had been a bearish engulfing, and towards the US Open, the price actually could not cover that. So after some uncertainty, so there are a lot of factors that are going on. A market structure is being broken. Then there is a lot of volatility, both wicking and actually not going anywhere. The neat movement of price was less than $40, and there was a big engulfing candle, uh, and then the price could not reciprocate that engulfing candle, because when we generally see engulfing candle in volatile assets like this, like in this case is happening engulfing, and then there is a bullish candle. It's kind of actually working against that, but still in this case it could not do anything. So before this US market open, if we go back to 30 minute, I can show exactly where we exited. So at that point, at that point, before the US market open, this was the US market open candle. Before the US market open, we closed the trade, waiting the whole day. We could have taken the profit, but this was the opportunity that we took. And yeah, mm, I, since it did not work, I did not want to risk it till the opening, and it was obviously breaking the internal structure as well. If we look at it, after this candle, this low was being broken. Uh, this low was being broken going into the US session, and that was a natural exit point which I took. And then, because my view was on the large time frame, this was just management. On the larger time frame, my view was that it was again going up. I took the entry again after the US market open, precisely, I think, 30 minutes only, into 30 minutes into the market. I took the entry, and my entry point in this case, I had a couple of entry points here again. And it was not that I just put one entry. So my entry points in this case were at the bottom of this candle. Yeah, around this areas. Yeah. So around this area, which was getting support, giving resistance, getting support, giving resistance, getting a lot of price action there, and we can see it directly connect to a previous liquidity pool as well. So we are seeing that if we go to as well, you can see that that this is really an active area. So that was my one entry point. I had another entry point at this area, 19,350, and another entry point at 19,280. So I had three entries of 10 lots each. So overall, we entered 20 lots here. In this case, we had 30 lots placed. I had placed here 30 lots. Sorry, 50 lots. Only 20 got filled because the price actually didn't go to this bottom area. I had one place at I think just around the middle point of this liquidity pool, and at one at the bottom at 19,080 or something. But in this case, it just got filled the first one. So 10 lots we filled. As you can see, it filled only 10 units. Uh, then other ones did not get filled, so I closed them in later situations when the price moved up. So there was no movement for a long time. So this was entered Tuesday 7:30, and there was no movement for a long time. If we see, the actual movement only came on Wednesday afternoon. So almost 24 hours later, the price actually started to move up, and then the FVG was broken uh, towards the FOMC, and at that point, I think I took the natural exit, which would be in the stop. If we can see this, my exit point was at around this 1900 mark, which again I have placed for the current trade as well. I'll explain. So this was my natural exit point, but I took it a little bit earlier. If we go to the really low time frame, I think Powell was still speaking, so I took that exit at 19,821. It went 100 point more up, but yeah, we already made $400, which is more than enough. I had secured my trade, and the exit was clear, and there was no reason to stay further and risk more. So I think that's the way I manage the trade, mostly looking at the longer time frame patterns and what was happening on the larger scale of time. And if this double bottom and then correction towards this area, and I enter again, exit at the right time around $400, and we have entered the trade again, which I'll explain why. So obviously, keeping the theme, it is creating higher lows. So this is the double bottom, but it's not that bottom. It's a higher low from that bottom, higher low. Then again, we are getting a higher low in this point where we entered and exited. And then again, we are getting a higher low, possibly. We don't know if it could break down, but this is the trade we are making. And this is the entry we took. If we look at it, our entry point is 19,585. So 19,585, that's the point where our entry is. And this was the area we placed the trade. We had another 10 lots around here, 19,000 20 lots actually. I just moved it to lower points. We had a trade around this point, actually, yeah, 450, 19,450. We had that trade, uh, which would give us quite a good average entry around 19,500. Currently, I have placed the SL below the current price, lowest price of this area, because I just want to get out of this trade if the price falls, and since we are close to the US market open, and enter again lower. So that's the logic of the entry. If we go to the lower time frame, we can see where we entered. We entered at this candle. This FPG is being challenged. If we go to the higher time frame, this FPG is being challenged. My exit is right above this OB. So if this order block is broken, we can expect larger upside. And obviously, if this 4-hour triangle is broken, we are having much larger upside. Obviously, in all things, when all things are working right, I would expect the price to actually break this 150 area. So 20,150 area being broken. So this area being broken means price is back on the bullish train. At the moment, the price is in a really critical area where internal movements are happening. So these are all internal movements. We are still quite clearly on the bearish path after this price goes back above. So if we look at it, when the price breaks through this point, so this is the point on forward when we are on the bullish trend. And what I would look for in this case is a trade like this. So we here and we get back here, and then we target this. So in this case, my trade would be like this. So this is a target of $1,000. This is a stop I would place around $200, and then just trade it. Obviously, this is a hypothetical situation, and we would really analyze the market in merit basis, what is happening then, as we are doing now. But yeah, all things going well, we could get that trade in the next few weeks. But at the moment, our target is still that triangle top, which is where I have placed the target. As you can see, this is a $3,000 target, whereas the stop is only $800, which gives us almost 4 to 1 risk reward, and that's something that is very good. We generally will try to keep 2.5 or more, because yeah, these are long term trades, and we have to manage the risk accordingly. So that's how we should do it. And yeah, as long as this higher low pattern continues, we are well within our strategy and well within our area of trading. And obviously, there is no big bullish FBG being created at the moment, which should be a great positive if it is at a later stage. But at the moment, we don't have a clear bullish FBG, which is why also we still have uncautious areas. But in cautious areas, these kind of good trades are also still there. So I think, yeah, that's about it. Anyway, thank you.